Hello viewers, welcome to my channel. Today we are going to see piecemeal payments of dissolution of partnership. Okay, in this piecemeal payments there are two methods. One is maximum possible loss method and the another one is highest relative capital method. Today we are going to focus only on maximum possible loss method. The concept is each installment realized after making all the outside payments, liabilities. This amount realized is considered as final payment, and whatever the assets yet to be realized, claims to be recovered, is not going to realize. We consider that they are not going to realize any further amount. Okay, only this installment, whatever realized, that is considered as the final payment. Rest we are not going to receive any amount. So whatever the payment due to the partners minus the amount realized will be the maximum loss. That will be distributed either in profit sharing ratio rule, or we will be following, if there is any deficiency, we will be following Garner versus Murray rule. All of you know what is Garner versus Murray rule. If you are not knowing it, you please watch my previous videos in which I have explained about it in detail. Okay, so how we proceed? First we will calculate the total amount due to the partners, and whatever amount realized is subtracted from that, and the balance is considered as a loss, and this loss is distributed among the partners in profit sharing ratio. After distributing the loss, still somebody is at a loss, his figure comes as minus. Okay, so for a particular partner, then the other partners who are having a positive figure will contribute, will bear this deficiency in their capital ratio. Let us understand it through the example. Hope you will be able to understand it if you once you go through the sum. Okay, so let us proceed with the sum. I have taken one sum. The following is the balance sheet of XYZ sharing 5 is to 3 is to 2, and their dissolution happens on 31st December 23. For saving the time, I have prepared the sum. I'll be explaining it, you will be understanding it. Okay, still if you have any further queries, please leave it in the comment box, and do not forget to subscribe. If you have not yet subscribed, please do subscribe my channel. You have to share it with your friends so that other students like you are also getting benefited out of that. It is our request. Till now, who are all subscribed, I am very, very thankful to those. Okay, so let us proceed with the sum. So there is a capital account and loan account to I, and outside liability of creditors and cash and other assets. And there is a bill due under discount. It means that there is a bill receivable which is due for receiving payment on 1/4/24. It means the debtor has to make payment only on 1/4/24. But now we are closing it on 31st December itself. So we do not know whether this fellow will make the payment because this has already been discounted. We have taken the money, the firm has taken the money from the bank. So it becomes a contingent liability on 31st December. In case this bill is not met on that due date, we have to make payment to bank. Bank is an outsider. So we should have provide for this also. Okay. So you will better understand when you see the sum. So they have given the realization every month. So it is a piecemeal. Then and there we will be distributing. We will not be waiting for all the amount to get realized and then to distribute. Okay. So the expense is expected to be 5,000 rupees. So first we will set aside this amount. Okay. Then we will continue. So statement showing distribution of cost. Sorry, cash. So particulars, opening balance of cash is 20,000 as per balance sheet. You know this. Okay. Then other assets, creditors, we have to make payment 10 lakh. and Y's loan account is 2 lakh, and the capital account is 55,000, 37,500 and 31,500 due to these partners. So first what we are doing, we are going to reserve the realization expenses because we do not know how much is the actual expenses. When it comes, we will adjust it. Okay, right now we will set aside 5,000 rupees for dissolution expenses. Now the balance is 15,000. Now cash realized on 1st January is 8,85,000. So total amount available is 9 lakh rupees. First we will make payment to the creditors. So 1 lakh is yet to be paid and partner's loan, Y's loan account is 2 lakh rupee. So the next amount realized in February is 3 lakh. This 3 lakh is paid to 1 lakh is paid to the creditor and 2 lakh to Y's loan account. So everything is settled now. Now coming to the 1st March, we are receiving 8,000 rupees. But as I have already told you, there was a bill which was already discounted by the firm. So we have to keep aside that amount also because till it is met, we cannot use this amount. We have to make payment to, in case this is not met, we have to make payment to the bank. Okay. So 4,000 is kept aside. Now only the available cash is 4,000. This has to be given to these three partners. To whom it should be given, we do not know. So the method what we are following is maximum loss method. First, what we are going to do, how much is due to these three partners? We are going to total that amount, 55,000 plus 37,500 and 31,500. So total comes to 1,24,000. We have to make payment to these three partners. But how much I am having in my hand? Only 4,000. So what is the loss, maximum loss? Because we consider that hereafter we are not sure whether we will be receiving any amount. So we consider it, this is the final payment, 4,000. So what will be the loss maximum? 1,20,000. This loss is distributed in PSR, 5 is to 3 is to 2. So it is divided by 10, 12,000. So 5 portion is 60,000, 3 into 12, 36, 2 into 12, 24,000. Now see here, we have to make payment of 55,000 and the loss comes still more, 60,000. So still there is a loss of 5,000, but these two are having a plus figure. This total also comes to 9,000, but we are having only 4,000. So first of all, this deficiency will be met by these two people in their capital ratio. What is their capital ratio? 375 is to 315. The double zero, we will ignore it. So 690 total. So 375 divided by 690 into 5,000. So Y has to bear 2,717 and Z has to bear 2,283. So when you subtract this, see this fellow is having only 1,500. Now he has to bear 2,717. Again, he also comes in a minus figure. So this will be met by Z now. Okay. So now comes the 4,000 rupees. This is what the actual cash available. So this amount will be paid to Z. Okay. So we have to make payment 31,500. Now 4,000 will be paid only to Z. So the balance will come down as to 27,500. Whereas these people, we have not made any payment. So the balance will remain as such their capital. Okay. So now what happened? In April, we realized again 5,000 rupees. Now they say that in April, the bill was also met. Okay. The ultimately 4,000 only were paid on 1st May. The acceptor of the bill under the discount met the bill on the due date. So when he has met on 1/4/24, so we need not to keep that reserve. So we will add back that reserve here. Now you understand. So now the cash available is 9,000. We have to make payment 55,000. We didn't make any payment to this fellow, and we didn't make any payment to this fellow. But here his capital, we have made 4,000 rupees payment, so 27,500. The total comes to 1,20,000. 55 plus 37,500 plus 27,500. We have got cash only 9,000. So what is the balancing figure? 1,11,000. This is the maximum loss. So this will be distributed in PSR. Again 5 is to 3 is to 2. That comes to 55,500, 33,300 and 22,200. See here again, this fellow is deficiency 500. This 500 will be met by these two people because they are having a positive balance. So again in their ratio, 375 into 500 by 690, 315 into 500 by 690. This comes to 272 by Y and 228 by Z. So this 500 will be met. So the balancing amount 3928 and 5072, totaling 9,000 is paid to Y and Z. 3,928 out of 9,000 is paid to Y, and 5,072 is out of 9,000 is paid to Z. Now their balance comes down because we have made payment of 3,928 out of 37,500. So the balance comes to 33,572. Same way, 27,500 we have paid 5,072, so the balance comes to 22,428. And for X we did not make any payment, so the balance comes as such. Now cash realized on May 1. Cash realized on May 1 is 10,000 rupees, and after that we didn't realize any amount, so this is the last amount, and the realization expenses are actual amounted to 4,000 only. Okay, but we have reserved 5,000 rupees, so we realized it 10,000 rupees, and the balance from the reserve 1,000 rupees. So total available cash is 11,000. We have to make payment of 55 plus 33,572 plus 22,428, which comes to 1,11,000. We are having only 11,000, so 1 lakh is the loss. So that is distributed in PSR 5 is to 3 is to 2. 50 plus 30, 80 plus 20, 1 lakh. So balance 11,000 is paid to them, 5,000, 3,572 and 2,428. So the actual loss is 50,000. He has paid 5,000, so the balance yet payable is 50,000. He was paid 3,572, the balance payable is 30,000. Z is paid 2,428, the balance payable is 20,000. So this is the actual loss on realization. You can find out your sum is correct only if your actual loss comes in your profit sharing ratio. See here, this comes in 5 is to 3 is to 2. Hope it's clear to all of you. And if you like my videos, please like, share, and subscribe. Your subscription is not going to cost anything. Okay, so keep learning. Thank you for watching my videos. Okay.